Is 4,473 crores via an IPO, out of which 3,662 crores will be a fresh issue, and the remaining 811 crores will be an offer for sale from existing investors, IFC and IFC FIG, both of which are arms of the World Bank. The price band for the issue has been fixed at 370 to 375, and on the upper price band, post-issue implied market capitalization works out to 44,733 crores. So if you compare it with the market cap of some of the peers, you will see that it ranks much higher than the likes of Equitas, Ujjivan, AU Small Finance Bank. So not only these NBFC turned banking entities, but it also compares or is much higher than the likes of some of the private banks like IDFC Bank, Federal Bank or RBL Bank. So it's going to be a much larger company. In terms of their shareholding pattern, Bandhan Bank's promoter, which is Bandhan Financial Holdings, holds about 89.6%, and that share will come down to 82% post the IPO. If you look at the overall business aspects, they had started off as India's biggest microfinance company, after which they began operations as a commercial bank in August 2015. They have a total of about 887 branches as of 2017, end of December 2017, but all of them are largely concentrated in the north and northeast regions, with 56% of the branches just in 3 states of West Bengal, Assam and Bihar, and their share of loans made to women is also much higher, with 10 out of 12 million customers as women. Now, if you look at their loan book mix and how that has changed since they started operating as a commercial bank, the share of microloans has come down from 99% to 88%, but that still continues to dominate the loan book. You have other retail loans which have come up to 3%, which includes home loans, mortgage loans, LAP and two-wheeler loans, etc. So that's a part that Bandhan Bank is looking to scale up on. Now, if you look at their financials and if you look at the way that loans have grown over the period of 2 years, from FY16, 12,000 to 22,000, deposits from 12,000 to 25,000. So they've actually been able to scale up their a liability franchise extremely well, the balance sheet very well after or in a short span of time itself. If you compare it to some of the peers, you will see that the gross NPA ratio is also amongst the lowest, especially when you compare it to its microfinance turned banking entities like Ujjivan Financial or even Equitas for that matter. So they've been able to manage even the demonetization pain pretty well. So 1.67% ranks much better as far as the asset quality is concerned, compares closer to that of private banks. Net interest margins is also amongst the highest in the industry at 9.9%. The CASA has been significant at 33%, even something that the likes of RBL Bank or IDFC Bank have really failed to do and build up that CASA franchise that quickly. Cost to income ratio is at about 35%, one of the lowest in the industries, and cost structures is the USP of the bank. They've been able to manage that extremely well. If we actually look at the return profile as well, it's a superior return ratio profile, with a return on our asset of 4.5% and 28% as far as ROEs is concerned. This will of course come down post the IPO, but analysts still believe that the return profile will continue to remain much superior compared to peers. The pain point really is when you talk about valuations, because based on a multiple of 4.9, which we arrive at if you look at the price to book value for 9 months FY18 on a post-issue basis, it's much more expensive than a Equitas, which is at 2.1, or a Ujjivan Financial, which is trading at 2.4, and it compares or is asking for a valuation closer to the likes of HDFC Bank. So definitely an expensive or a pricey IPO, but as far as brokerages are concerned, they're upbeat on the business model, and you have Antique saying that they should subscribe to the issue. ICICI Securities has recommended a subscribe. Centrum has said subscribe, but for a long term, given the pricey valuation. So they see